Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to today's Bull versus Bear webinar. Steve Miley here on the call for Trade Day. Welcome, everyone. Welcome. Going to go through our usual regular run through here today. Calendar, what we've had, what we've got coming up. Take a look at some articles from the major news wires. What are the macroeconomic, the fundamental, the geopolitical events and factors that are influencing financial markets right here, right now. We'll also take a look at the charts. How are the charts shaping up for those markets that you guys are trading? Just a heads up as well, guys. I know there was no webinar yesterday. My apologies. And there will be no webinar tomorrow. I'm on CNBC as a heads up again tomorrow. So I'm on CNBC Europe. That's around 10 o'clock UK time. So I won't be back from London in time. I have a commitment there as well. So I won't be back in London for time, and I don't really want to do it from the road because the probably internet connection will be dodgy. So there'll be no webinar tomorrow. So my apologies ahead of time. No webinar on Friday whilst I do my interview on CNBC. But if you do get a chance to tune in, we'll grab the clip anyway and share that with you guys on CNBC tomorrow. So just a heads up there, no webinar tomorrow. So let's just run through what we've had, what we've got coming up. Just a little look back to yesterday. So before we look forward, if it will click back to it, there we go. So yesterday, the data, durable goods data, actually slightly better than expected in here yesterday. So, and not massively higher that they would cause markets to worry about inflationary pressures necessarily. So that was probably a positive for the market. Some concerns around crude oil inventories in here, and oil continuing to surge higher in here, and that's been the main. Or one of the main factors in here on the weakness over the last 24 hours and going into today. Just back to the calendar going into today, what is the focus? The focus today in here, we've already had this regional data in here from Germany. So you can see in here, regional CPI data, all of this you can see, North Rhine-Westphalia, Baden-Württemberg, etc., Bavaria, Brandenburg, Hesse, Saxony. So we had all this German regional data, and then the also in here coming up the German overall data. So that's more important. But we're watching out for that. So it's been kind of mixed. You can see reds and greens in here on the German CPI data so far this morning. On the Eurozone side, we've had consumer confidence data, which came in bang in line with expectations. Going forward, though, beyond the German CPI data, so that comes up in 27 minutes. That will be looked at. We do get US GDP. Now, GDP is obviously very backward-looking data generally. This is certainly quarter-on-quarter data from Q2. So comparing Q1 to Q2, remember in here we are a few days going into Q4. So we've had Q3, and this is not relating to anything recent. So very, very backward-looking, rarely has a massive impact. We also get jobless claims. Weekly data usually doesn't have much of an impact. Home sales usually doesn't have much of an impact. We are getting Powell speaking later today, though. So eyes on Powell. 4 o'clock today. It's 4 o'clock. 1600 hours. 4 o'clock today, Eastern time. Keeping an eye out for Powell later today. So could be interesting to see what Powell's got to say, given the pool's last time out, last meeting last week, and then the anticipation for another hike though before the end of the year. So really most of the eyes on that going today. I wouldn't worry too much about the GDP data. I might have a very small market move on that, but not too much. Let's go to 5 things to start your day. And there's a kind of few things going on the macro side, all of them having a relatively negative impact for risky assets. So risk off scenario continuing at the moment, and downward pressures continue on the stock indices. So shutdown risk, a deal that would avert the government shutdown the weekend, is looking less likely. So potential government shutdown in the US, obviously nothing positive about that. Oil broke above the $95 a barrel mark and heading towards $100 a barrel mark on the WTI numbers in here. So real concerns in here with regard to that oil price move, and those inventory numbers not helping matters yesterday. Potential for the United Auto Workers strike to expand. Again, nothing positive about that. And then also we had a disappointing forecast in here from Micron Technology in here, the chip maker. So again, that's far from positive here. We do get I did miss out there. We do get the PCE price index data. Now that PCE price index data, is somewhat important. But the more important data we get tomorrow. So the PCE data in here, you see this is the quarterly data in here, core PCE prices, okay, and in here Q2 data. If we step forward one day to tomorrow, far more important, and this is what they actually got me on CNBC talking about tomorrow, is this PCE data and what impact that could have. So tomorrow, where is it? Here we go. Here we have, the PCE data, the year-on-year, month-on-month data for core PCE. Remember, the PCE data in here is what the Fed tell us is their preferred measure of inflation. Okay, it still doesn't move markets as much as CPI, but nevertheless is an important set of data. We have that coming up tomorrow, so that's more important. Even though we get this other PCE data in here, the PCE price index data in here, it's not as nearly as important, the data, the quarterly data there, as the month-on-month, year-on-year data that we're going to get tomorrow. So really, that's the main focus going into tomorrow. And then obviously Powell speaking. We'll host a town hall of educators. So we're watching out for that. So that's the 5 things of your day. Yes, Senate, House hold procedural votes as partial government shutdown looms. We've already touched on that. So these articles are going to run through now, just kind of really expanding out on what we've run through there on 5 things to start your day. Micro is set to drop on forecast for worse than expected loss. So there's the semiconductor, the chip industry under negative pressure from that. Bond sell-off pushes treasury yields to new 07 peaks. So bonds pushing still higher in here. And September set to be the worst month for global stocks in a year. September looking very negative in here as we go to round out the year round out the month going into tomorrow and rounding out the quarter as well. Yields pushing high, as you can see in here, and the highs, pushing notably higher yesterday, higher again in here overnight. So this is bond prices down, yields going higher. High yields are more negative for growth stocks, but generally negative for stocks overall as they are higher long-term interest rates. Oil touching $95, shrinking inventories. We spoke about that already. Brent already at $100 is only a matter of time. So, Brent is getting close. Brent trading above the WTI number in here. The WTI being West Texas Intermediate, which just touched $95. Brent, I think, up at like 97, 98 in here at the moment. So, it's got the price on Brent here. You guys are not trading Brent anyway. You're trading the futures market is on the WTI, on the WTI data. So oil spike develops coup de grace to dire Q3, so a negative end to Q3 with oil pushing higher. Saudis, though, may ease the oil cut sooner than expected, thinks Rapidan says. Okay, so potentially Rapidan Energy Group in here, Saudi Arabia closer to declaring its oil market mission accomplished than traders realise. So maybe we're going to get a shift from Saudi Arabia if oil gets up to that $100 mark in here, and increasing turning the taps on, and maybe give us some respite. And then the woes continue to come out of China. Evergrande halts trading after found put under police control. There from Bloomberg, Reuters. Evergrande shares halted as concerns mount about developers' prospects. So that's the property market in China. We've been focusing on that, continue to be a negative. So I don't know if you've noticed, but I've not said one positive thing. Every piece of news in here has been pretty negative. And the market is holding in relatively well, but still, technically looks very, very negative. And, I'm still coming at this with a bearish view in here. Still, the market in here predicting that the next meeting, the chances are that the Fed stay unchanged, and still the market hoping in here, just under a 60, this is just up slightly, but just under a 60% chance the market feels would be unchanged on rates by the end of the year still. On the overnights, what do we have? Well, the Nikkei, the Japanese Nikkei was down over 1.5 to Hang Seng with that Evergrande news down 1.1% in here. Europe's just about holding in. The German DAX index is pretty much unchanged. The French CAC is up just over a quarter with the FTSE. The UK index down about a third. And on the overnights in here, we're pretty much unchanged in here on the US averages, down a tenth on the Nasdaq, up a tenth on the Dow, on the futures, and the S&P pretty much unchanged going into today. Right, a quick look at the charts. If you've got any questions, guys, please do throw them in because I'll wrap up fairly quickly at the end. Chart's still very negative, despite you had this rebound in here. So the market is moving down towards this kind of like volume area, this big volume area that it's quite a wide volume zone, like 41.90 all the way up to like 42.80. It's a massive volume zone in here that the market produced in here back earlier this quarter. So it was this quarter, right? Yeah, back in August. Yeah. So this is August data in here. So yeah, the market's got this big volume area. Also, the 61.8%, 50% retracement in here is down around 42.53. So we tried to rebound from above this, like the top of this volume zone. You can see the top of the volume zone there, kind of trying to come off of that top of that volume zone in here yesterday. So it was kind of a half-hearted positive candlestick, but then the market like fading a little bit going into today, and still does look vulnerable. So this is the S&P in here. So despite that rebound, it's a potential bottom in here. It still needs to do more work, and minimally I'd want it above like this little, you got this little sloping line in here, and minimally you'd want it like really up through kind of there, I would say. You'd want it up through this line, so ultimately really it's above these peaks in here, somewhere above 43.23 to 27 zone, 43.23 to 27. The market needs to get above that, and then you could start to look at this as a potential bottoming pattern, and then ultimately above that high there, which is at 36.5. So the 23.27 kind of area needs to be cleared to ease the bearishness. Otherwise it still looks bearish, and you can see we're trailing lower in here anyway over the last hour, and looks vulnerable to a test of this little overnight low in here, which is down at 43.02 and a quarter. So yeah, still looking negative, but if we can get through 23 to 27, get through that little high there, where's that high there, 30 and a quarter, yeah, but 23 to 23, 27 I think is enough to cause a little basing pattern, and then you need qualification through 43.36.5 on the top side. Similar story for the Nasdaq in here. You got this kind of potential hammer pattern on the Nasdaq, so potentially basing, but then weakness this morning, and then again we go in here. Actually this trend line works pretty well, this old trend line from yesterday, or from 2 days ago actually, I think. Whoops, let me just extend it out. So yeah, it needs to get back above here. So minimally, like that's taking us up through 14,800, and ultimately really above that little peak there, 14. No, that can't be right. Is that right? Sorry. Yeah, 14,800, and then the peak there is 14,821.5. All right, so 14,800, minimally like back through 14,750. But really 14,800, then it reverses this line in here, and it looks a little bit less vulnerable. This looks like then a potential bottoming pattern. At the moment, though, it looks vulnerable. You could say it's a little mini inverse head and shoulders building over the last couple of days, but it needs to do more. It needs to be up through, I'd say at least 14,800 to say 820 to signal a mini base. Otherwise it's vulnerable to push down through the overnight low. Overnight low is 14,677 and 3/4, and then maybe back down to yesterday's low. So staying vulnerable, and there's a lot of negativity. The only good thing I would say if you're on the bullish side is the market's taking a lot of negativity. Yes, it's been going lower, but it's absorbed a lot of negativity. A lot of these things could turn. Oil could roll back lower, right? If the Saudis decide to turn the taps back on, stop the supply cuts. If that happens, if there's a resolution on the auto worker strike, if the Chinese property market, has it seen the worst of it now? Is that the worst of it over, or is there still some more worse to come? Can the US government avoid the shutdown? All those things could happen on the positive side. We've got the market's taken a lot of negatives, negative. Yes, it's gone down, but if any of those things start to resolve themselves, we could see a relief rally, okay? And you could see some value in the market. But at the moment, it stays very negative, until we get above the resistance levels I've just outlined, it stays negative as well going into today. Any questions? I'm guessing not, because you would have put them in the chat already as I asked. If you do want to ask anything, ask it quickly now. Just a reminder, no webinar tomorrow, guys. Right? No webinar tomorrow. I'm on CNBC. If you can tune into CNBC Europe, that'd be great. I'm supposed to be on at 9:45, so it'd probably be a little bit later than that usually, between 9:45 and 10 a.m. That's London time, by the way. It's 9:45, 10 a.m. London time. So, so there'll be no webinar tomorrow. All right, guys, have a good one. Take care, stay safe, and I'll be back with you for another webinar on Monday. No webinar tomorrow. Have a great trading day. Bye.